Okay, imagine seeing this headline. Intel, down over $100 billion in market value. And not because of, some bad product launch. No, this is because of a single massive decision coming out of China.
It's huge.
And this isn't just like a stock blip, is it? This feels much bigger, like a geopolitical tech war really heating up.
Oh, absolutely. China has officially ordered the complete removal, we're talking total replacement of all Intel and AMD chips.
From government systems, state-owned companies.
Everything. Replacing them with their own stuff. Huawei, SMIC.
Wow. So what's the thinking behind that? Why now? Why so drastic?
No, this isn't exactly out of the blue. It's really a direct result of years of U.S. sanctions targeting China's tech sector.
Okay.
So Beijing is hitting the accelerator. They've wanted tech independence for a while, but this speeds everything up dramatically. It's a strategic pivot.
Okay, so what does this actually mean? For the whole global tech scene, for giants like Intel, obviously, but also for investors, for you listening.
Right.
Get ready, because in this deep dive, that's our mission. Cut through the noise, give you the essentials to understand this new tech power map that's unfolding right now. So, let's be really clear here. China's moved this directive. It's not just for show, is it? It's not temporary.
No, not at all. This is deep. It's a structural policy, effective immediately, and the goal is pretty explicit. Permanently kick U.S. tech out of their critical infrastructure.
Permanently?
Yeah, this is about control, long-term control.
And how far does this actually reach?
Oh, it's incredibly broad. We're not just talking the central government in Beijing.
Right.
It's provinces, cities, state-owned banks, public universities. Think major players like China Telecom, Petrokina.
Wow.
Every single piece of gear with U.S. tech inside, servers, workstations, you name it, has to go.
And it's not just the chips, the hardware.
No, that's key. It extends beyond hardware. Think software, too. Microsoft Windows, Oracle databases that are on the way out, being systematically replaced.
The impact on Intel alone must be just massive. China was a huge market for them, wasn't it?
Huge is an understatement. It was one of their most important markets, representing, up to 27% of their global revenue?
27%.
Yeah, something like $15 billion just from China in 2024 alone. And now, poof, that revenue stream basically dries up.
And flows straight to their Chinese competitors.
Exactly. It's a direct transfer. And, connecting the dots, many analysts are saying this now, Washington's tough sanctions.
Yeah.
Far from stopping China, they actually maybe inadvertently poured fuel on the fire for China's tech self-reliance push.
Like necessity being the mother of invention.
Precisely. And now we're seeing the results. They're getting there.
Okay, here's where it gets really, really interesting for me. Just a few years back, the idea that Huawei or SMIC could genuinely challenge, let alone replace, companies like Intel or AMD.
Seems like fantasy, right?
Totally. Science fiction. But now here we are in 2025, and they're not just competing, they're actively taking over core parts of China's tech system. How on earth did that happen so fast?
Well, Huawei's story is pretty remarkable. Remember those U.S. sanctions back in 2019? Cut off their access to advanced chips, foreign tech.
Yeah, everyone thought that might be the end for them, or at least a major blow.
It was a major blow, but it didn't break them. Instead, they famously just doubled down, poured everything into R&D.
Right.
And that led to their own chips. Kunpeng for servers, Ascend for AI. Initially, maybe not quite as powerful, sure. But they've improved incredibly fast. Performance, energy efficiency, surprisingly good now. And they're not just lab projects, they're widely used. Government, telecoms, data centers, and crucially, all designed in China.
And what about SMIC, the manufacturer?
Yes, Semiconductor Manufacturing International Corporation, China's main chip maker. They've also made, massive strides.
You mentioned 7-nanometer equivalent production. What does that mean in simple terms?
Think of it like packing more and more power into smaller and smaller spaces on a chip. It's cutting-edge stuff. And SMIC achieved this level. Even without access to the most advanced tools, these EUV lithography machines everyone talks about, which are basically essential for the top tier.
How?
Clever reverse engineering, pooling national talent, and, let's be honest, huge amounts of state funding and support.
So wait, SMIC makes the chips that Huawei designs?
It's a significant portion, yes.
Yeah.
So you see it right. They're building this completely Chinese supply chain. Design, manufacturing, all internal.
A fully autonomous ecosystem.
Exactly. That's the bedrock of their whole secure and controllable technology strategy. And another fascinating angle is their shift in architecture. They're increasingly using things like RICV.
RISC-V?
Yeah, think of Intel's main architecture by 86, like a secret patented recipe only Intel can use. RSCV is more like an open source cookbook. Anyone can take the basic recipe, adapt it, build on it freely.
So no foreign licenses needed.
Precisely. It gives Chinese firms total freedom and control over chip design. It's not just a tech move, it's kind of a political statement too.
Yeah.
Independence.
Okay, so bringing it back to Intel, what's the actual damage? The bottom line impact. We're talking real money here.
Oh, absolutely real. The estimates are staggering, potentially $9 billion to $12 billion annually lost.
Annually.
For the next 3 years, just from these canceled government-related contracts in China.
Wow.
But it doesn't stop there. It's not just government. We're seeing private Chinese companies starting to swap out Intel too.
Why? Just following the government lead.
Partly, but also perceived political risk, right? They don't want to get caught if relations worsen or if their own supply lines get hit down the road. It's about hedging their bets.
And the market reaction, you mentioned the $100 billion drop. That was fast.
It's brutal and immediate.
Yeah.
Shares plunged over 20% almost instantly. It wiped out, nearly $100 billion in value. And look, this doesn't feel like a temporary dip.
No.
It feels like the market fundamentally reevaluating Intel. For decades, they were global tech dominance, right? Exactly. Now, investors seem to be saying that old model, based on selling everywhere, maybe it's broken in this split tech world. It really feels like the end of an era.
And their financials back this up.
Sadly, yes.
Yeah.
Look at Q1 2025, a net loss of $821 million. That's their fourth quarterly loss in a row.
Ouch.
Revenues were okay, actually slightly beat expectations at $12.7 billion, but the loss and the outlook for Q2, cautious. Revenues expected between $11.2 and $12.4 billion, maybe another loss up to 32 cents per share. Wall Street wasn't happy.
And the bigger picture, like for the whole last year.
Fiscal year 2024, a huge net loss, $18.76 billion. Negative operating margin, 68%. Gross margin down to 15%. It paints a pretty grim financial picture.
And on top of all that, there's this AI challenge I've been hearing about. They invested heavily in new AI chips, Meteor Lake, Lunar Lake, but demand is weak. What's happening there?
Yeah, that's another major headache for them. This AI challenge, it's not just slow adoption, it looks like a bit of a strategic misstep.
How so?
Well, they bet big on these new, expensive AI-capable processors, assuming everyone would jump on board immediately.
Right.
But consumers, maybe feeling economic pressure, they opted for older, cheaper, proven chips like Raptor Lake. So you get this weird situation.
Let me guess. Shortages of the old stuff no one expected.
Exactly. Shortages of the older models, while the brand new, expensive AI production lines, well, they're not selling as hoped. Lots of expensive inventory just sitting there.
A costly mismatch with the market.
Very costly. And meanwhile, competitors like NVIDIA, AMD, they have a really strong grip on the AI market, especially in data centers, which is where a lot of the action is.
Right.
Intel's own AI accelerators, the Guideline, they haven't really made the expected splash. And plans for their big Falcon Shores GPU already scaled back.
So internally, how are they coping? New CEO, right? Lip Bhutan. What's the plan?
Yeah, Can's overseeing a pretty massive restructuring, trying to steady the ship. They're cutting management layers, hoping to speed things up. They've even implemented a 4-day in-office work week, trying to boost productivity.
Interesting.
And drastic cost-cutting, aiming for operating expenses of $17 billion this year, down to $16 billion next year. Which unfortunately means job cuts of huge number, potentially 22,000 positions. It shows just how serious the situation is. Stepping back a bit, you really have to see Intel's struggles in China as, well, a major wake-up call for the U.S. and its position in global tech.
Yeah.
For decades, U.S. chip companies basically ruled the roost. Intel was the symbol of that dominance. But now, with China pushing so hard for self-sufficiency,
that dominance is being challenged, seriously challenged.
Really is. It's a fundamental shift in that global tech power balance we talked about.
So the U.S. response, we hear a lot about the Chichip Act, billions flowing into domestic manufacturing.
Right. That's the main counter strategy. Boost chip making on U.S. soil.
And Intel got a big chunk of that funding.
They did. Up to $7.86 billion in direct funding, plus another $3 billion contract for something called the Secure Enclave program.
Secure Enclave.
Basically making trusted, secure chips specifically for the U.S. government. A guaranteed customer, you could say.
So what's Intel actually doing with all that cash?
They're investing massively. over $100 billion planned for facilities in Arizona, New Mexico, Ohio, Oregon. It's a huge bet on bringing advanced manufacturing back home.
Creating jobs, too, presumably.
That's the projection. Over 10,000 direct Intel jobs, nearly 20,000 construction jobs, maybe 50,000 more indirectly in the supply chain.
Right.
Their CEO is making a big point of it. Advanced chips made on U.S. soil again. Intel 3 process is apparently in mass production now. Intel 18A is supposed to be on track for next year.
We're also investing in people, training.
Yeah, that's part of the package. Things like $5 million for child care near the facilities, $4 million for a women in construction program, trying to build that domestic workforce pipeline.
It's fascinating, though. On one side, you have the U.S. pouring billions into bringing shipmaking home. But on the other side, as we discussed, the very sanctions designed to curb China seem to have, well, kicked their innovation into high gear. Huawei, SMIC.
It's almost counterintuitive, isn't it?
Yeah.
But that's exactly what seems to have happened. The sanctions, instead of crippling them, forced their hand.
Yeah.
Denied Western tech, they had to develop alternatives. And with massive government backing and a clear mission to eliminate dependence on the U.S., they accelerated things dramatically. It's a huge lesson in unintended consequences, really.
And this isn't just about China's internal market anymore, is it? You mentioned the global south.
Yeah, that's the next potential phase. We're seeing signs that many countries, maybe wary of U.S. political strings or just looking for cheaper options, are starting to eye Chinese tech.
As a viable alternative.
Exactly. As more economical, maybe less politically complicated. So if Huawei and SMIC start successfully exporting their chips, their full tech solutions,
we could genuinely see two separate tech worlds emerge. A Western sphere and a China-led sphere.
That's the big concern, yeah. A bifurcated global tech landscape. One block centered on the U.S., the other increasingly around China, each with its own standards, its own supply chains. It's not just about business. It's geopolitics playing out through technology.
But Intel isn't just rolling over, right? They're investing another $100 billion in their foundry business, IFS, trying to make chips for other companies.
That's right, Intel Foundry Services. It's a massive gamble, aiming to become the world's #2 foundry, behind TSMC.
And still pushing on AI. Gaudi 3?
Yep, intensifying AI investments, focusing on advanced packaging too, which is critical. They're definitely fighting back. But there's this warning you hear from some analysts. Even with Intel's stock price looking maybe low compared to its assets, a low price-to-book ratio, they warn it could be a value trap.
A value trap? Meaning?
No. Meaning it looks cheap, but it might not be a bargain. The worry is that because of all these challenges losing China, the AI struggles, the fierce competition, their future earnings just won't recover enough to justify even the current lower stock price. The underlying business has fundamentally changed.
Got it. So, looks cheap, but the future prospects might still be overestimated.
That's the risk they're highlighting.
And just to hammer home this whole shift, NVIDIA replacing Intel in the Dow Jones Industrial Average, that felt significant.
Hugely symbolic, wasn't it? Really reflects the rise of AI. NVIDIA's explosive growth, tripling revenue, that insane $3.3 trillion market cap, while Intel, the old guard, steps aside from that particular index.
Wow. Okay, so this deep dive, it's really shown that Intel's exit from China's core systems isn't just a news item, it's a major turning point.
Absolutely. A turning point in this global tech conflict. It's this complex mix of fierce competition, serious financial pressure for Intel, and, well, high-stakes geopolitical maneuvering.
And what seems really clear now is this trend towards digital fragmentation. Two tech blocks emerging, the West and China, increasingly separate.
Certainly looks that way. The paths are diverging.
So for you listening, understanding these huge shifts, well, it's not really optional anymore, is it? It feels essential to just anticipate what the economic future might look like.
Definitely. And as we watch these giants, the established players like Intel, the rising ones like Huawei and SMIC clash and literally redraw the global tech map, it leaves us with a pretty big question, doesn't it?
Which is?
In this new era, this era of intense competition, where depending on global supply chains suddenly feels risky, what does real resilience actually look like for a tech company? And how is that going to redefine who leads innovation in the decades ahead?